let's start by saying Dave Ramsey is an absolute legend. Okay, this guy, he is a legend. He's helped millions get out of a debt, but in 2026, following his baby steps is the fastest way to, well, potentially stay broke. So, yeah, that's the thing there. All right, so basically, the world has changed, but Dave hasn't. Between the 2026 housing collapse and the rise of predatory inflation and a credit system that now punishes you for having no score, his advice has become a financial death trap potentially. Today, I'm breaking down the 3 specific Ramsey rules that will actually destroy your wealth this year potentially and what the new rich are doing instead. So, we might have to just cancel out some of his advice a little bit. Dave's going to be watching this right now like, what? All right, so here's the thing. Dave tells you to cut up your credit cards and live on manual underwriting. In the 1990s, that worked. In 2026, it's a fantasy. Everything from your insurance premiums to your ability to rent an apartment is now tied to a digital financial health score. If you have zero credit because you followed Dave's advice, banks in 2026 view you as a higher risk than someone with $50,000 in debt. I'll show you how strategic credit, using the bank's money to build a moat around your cash, is the only way to survive in the 2026 banking surveillance that we talked about in my last video. Yeah, the IRS and the AI and everything that's happening. Yeah, this is stuff in the previous video that we kind of talked about, right? Now, point number 2. Okay, the mortgage trap. Dave's most famous rule, your mortgage should be a 50-year fixed where the payment is no more than 25% of your take-home pay. Let's look at the 2026 numbers for that. With the average home pricing sitting where it is and interest rates refusing to drop to 2020 levels, following this rule means you will never own a home. You'll be stuck in the rental treadmill forever, paying off someone else's 30-year mortgage while your rent increases 10% every year. In 2026, math beats dogma. I'm going to show you the leverage ratio that millionaires are actually using to buy properties today, okay? Today. It's gonna be big, okay? This is big stuff, all right? Big stuff. Follow along. This is Rough Draft Finance. We don't play here, okay? Obviously, look at us. We're obviously not playing at all. But yeah, going on. Finally, Dave tells you that if you invest in good old mutual funds, you can safely withdraw 4% or 8% in retirement. Except in 2026, the real inflation rate, the stuff you actually buy like food, energy, and healthcare, is outstripping those returns. If you pull 8% out of your volatile, like 2026 market, you'll run out of money in 12 years. Dave is teaching a scarcity mindset for a world that no longer exists. You don't need piles of cash strategy. You need a cash flow strategy involving AI-driven assets and high-yield private equity. Okay? Now, there's a couple things I want to touch on as well with this. I understand Dave's coming from the perspective of helping the common person, but one extreme good way to do that is taking some of these notes into advance and not expecting people to be uninformed and expecting that people can be informed on this stuff and they can level up. That's what I like to think of it from the angle, you know? I don't want to approach helping people in a way that's like, you're uninformed. I want you to be informed. So let's get you up to date and let's get you where you need to be, right? So, look, I respect Dave for the lives he saved with credit card debts, but you can't build a 2026 skyscraper using a 1990s blueprint. And if you want to see like 5 wealth accelerators I'm using to outpace the inflation this year, I might just have to put them together, okay, for you guys. Comment below blueprint if you want me to put that out to the public for you guys. Or you can tell me I'm wrong about all this in the comments about Dave. But I think Dave is approaching things carefully and helping people through a scarcity mindset. But I think we can evolve past that. So, yeah. Thank you guys for watching.